We haven't made any final decisions about what we're going to do with certain workers. What we're saying is that we might have to take extraordinary steps, especially the longer this goes on. We're going to have to take extraordinary measures to ensure the people's government operates, again, not perfectly, because it's not going to operate perfectly in the midst of a shutdown, but operate as well as it possibly can.
The U.S. Vice President calling for extraordinary measures as the government shutdown threatens thousands of federal jobs and risks shuttering key services. But investors seem to believe that this too shall pass. Live from Token 2049 conference here in the Lion City, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian equities rise led by tech as OpenAI strikes a deal with South Korean chip makers. Bitcoin getting a boost from shutdown uncertainty. We'll speak to Robinhood founder and CEO Vlad Tenev about his plans to take the firm's prediction markets product to countries outside the U.S. and whether regulatory hurdles could have an impact. Ethereum co-founder Charles Hoskinson will be joining us with his take on what led to the current crash in the crypto markets that wiped out around $300 billion. And we speak to the president of Circle, the world's second largest issuer of stablecoins, as countries and financial institutions race to join the game. Top story today, Washington grinding to a halt as lawmakers remain far apart on any agreement to reopen the government. President Trump has gleefully pinned the blame on crazed Democrats in the hopes that they will shoulder the political consequences. But his administration is also moving quickly to capitalize on the situation by shrinking the size of the federal workforce, with layoffs set to be happening very soon. Vice President J.D. Vance, for his part, links Democrats with Blink first.
I actually don't think it's going to be that long of a shutdown. This is a pure guess from the Vice President of the United States, because I think you already saw some evidence that moderate Democrats are cracking a little bit. They understand the fundamental illogic of this.
Stocks here in Asia gaining on the back of more AI optimism after U.S. equities rallied, ignoring the shutdown uncertainty. Let's discuss with Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, you wrote that investors see little reason for the political impasse to disrupt the rally. Why is that?
Well, because stocks are in such a good place. Equities had their moment of looking into the abyss in April when President Trump's reciprocal tariffs stunned investors. But since he backtracked on some of those and the AI theme came more and more to the fore, investors have become more confident both that the case for stocks to go higher is very strong in and of itself, and also that the Trump administration ultimately will blink if it is looking like its policies are going to hurt stocks. So in that situation, there's not a lot of concern at the moment about your broad damage to equities. Some sectors may suffer from what's going on, but unless this leads to or is seen to exacerbate an actual major labor market collapse, investors will look through the political impasse, encouraged perhaps by optimism that J.D. Vance's guess about how this might not be a particularly long shutdown. If that turns out to be the case, well then, any problems for U.S. stocks in particular might just be seen as being buying opportunities.
Well, Gov, it does look like the stars are aligned, correct? I mean, we have an easing cycle for the Fed. We also have stocks, going into this shutdown in a very, very strong position.
Yeah, that's right. That's why. I mean, we've got the VIX down at historically pretty low levels. And it's nothing like when there was a shutdown in 2018, which did see a spike in the VIX and an extra drop in equities. that shutdown came after equities had already rolled over for that year in 2018 and were sliding noticeably. They were negative for the year when the shutdown hit, and even as the shutdown approached. Right now, we've got stocks up pretty strongly. The only concern for an investor in US stocks is, are there better opportunities elsewhere when you look at some of the extremely strong rallies that are breaking out in Asia in particular?
Great stuff. Guthrie Reynolds, who leads our Markets Live Asia coverage. Of course, we're coming to you live from the Token 2049. Now, Vice President Vance, as you heard earlier, thinks that the shutdown may not last long. However, online prediction markets are not expecting a quick resolution to the federal impasse. Polymarket betting puts the chance of a government shutdown lasting 4 to 9 days at 48%. 29%, meanwhile, see it lasting 10 to 29 days, while 17% expect the shutdown to last for over a month. Well, our next guest is betting big on the prediction market. He runs Robinhood, the electronic trading platform that facilitates trades, including stocks, outcomes from prediction markets, and cryptocurrencies. The company's stock surged earlier this week after reporting a milestone of brokering more than 4 billion event contracts. Co-founder and CEO Vlad Tenev joins us now. Vlad, good to have you with us. I know.
Great to see you again.
When your stocks went up, you didn't quite think there was the prediction market that actually sent it higher, because you have a whole host of businesses.
Well, you mentioned yourself, though, just now how prediction markets are a new source of information about real events, government shutdown being top of mind today. So I think it just illustrates the power of this technology, not just as an investment asset, but as a source of news and information, and almost like a new media.
You're obviously excited about the prediction market. You want to take it outside the U.S. I mean, what kind of potential do you see? What conversations are you having? And what kind of feedback are you getting?
I think that the really interesting thing lately is we've been on a bit of an international tour. I just got back from Dubai. We're here in Singapore at this conference, and the rest of the world is very interested in prediction markets. I mean, in every single international conversation I'm having, it comes up, and everyone's trying to figure out their prediction market strategy. So I wouldn't have expected that necessarily. I thought it would be mainly a U.S. thing, but I think it's going to be much bigger. How much bigger?
Can you put a number to it? And what kind of growth are you anticipating?
Well, we recently shared that there was a Piper Sandler report, actually, 200 million in annualized revenue run rate for our prediction markets business, which would make it among, if not number one, of our fastest growing businesses of all time, which, we have a large crypto business. We're obviously leading in retail options and other assets. So this type of growth that we've been seeing is a little bit unique. And I think there's so many ways we can make the product better, and it's still a new product. Consumers are trying to figure out where it fits in the whole landscape. So we're optimistic about the future.
But there are criticisms, right? I mean, some are saying that we're seeing a blurring of lines between, finance and gambling, and it doesn't necessarily sit well with some, I guess, regulators.
Yeah, anytime there's a new innovation, and I think what everyone agrees is prediction markets is an innovation. We don't really know how to bucket it. It has properties of wagering, as you've mentioned, but also active trading. The trades are happening on an exchange. There's price discovery. There's no house, as in traditional betting. So you have a lot of traders going into the market and actually trading in and out during events. And then it's a source of information. So some people are like, is it gambling? Is it trading? Is it news? And I think the reality is it has properties of both, but it's a slightly different animal, and it has the potential to disrupt each of these three major industries.
You talked about how you've been surprised by the reception, right? I mean, people are excited about the prediction market. I'm just wondering if, there are countries out there which are more enthusiastic than the others. I mean, which ones are they? Which markets are excited about it?
I think it's a global phenomenon. I mean, even looking outside of Robinhood, you have Polymarket, which is bringing on-chain prediction markets on the rest of the world. In the U.S., we have Kalshi as one of the larger exchanges, and they're going through it in the more regulated TradFi manner. So I think the really interesting thing is it sort of mirrors the TradFi crypto duopoly across all assets. Tokenized stocks, for example, which we're introducing outside of the U.S., are on-chain versions of the U.S. Counterpart. And in the U.S., we have sort of the traditional rails that are powering it. So you're going to see a similar thing where, prediction markets could be a huge accelerant outside the U.S. for the crypto ecosystem.
So it could be a big business for you eventually in, say 5-10 years?
I think it's already a big business for us. I think the question is how big can it get and how quickly. And we're innovating. We're on the front foot. We're focused on making the product better, serving our customers. Like any tradable asset, I think Robinhood will be front and center in giving access to retail.
Let's talk about tokenization, because some people say that this could be the new ETF of finance. How do you see that playing out?
I said earlier in our chat, I think tokenization is a freight train, and it'll eat the entire financial system. But I think it'll be a very positive thing. I think that the financial system will be largely willing to go through this transition. I think what you're going to see is outside of the U.S., where there's a little bit less legacy infrastructure, and the big incumbents can consider it net new business. You'll see it, getting market dominance first, and then it'll be somewhat backported. You can see this in Robinhood's business. We launched stock tokens in the EU, which are tokenized versions of several hundred top names. We also introduced and demonstrated tokenization of OpenAI and SpaceX private companies. And as soon as that happened, we started getting lots of calls, not just from companies that wanted to know how to get involved, but also from large established counterparties, market makers, institutions. And they were asking us, they were like, wait a minute, how do we get involved? Can we provide liquidity here? Can we plug into your European offering? So I'm very optimistic that this is going to be a big shift, and we're at the very beginning of it.
You talk about a big shift, and we have to throw it out there. It's not just about stocks. It could be about bonds, real estate, and today we ran a story on the Bloomberg about how Zach Witkoff is talking possibly about tokenizing Trump's real estate. How realistic is that? How soon might that happen?
I'll tell you, it's not a technology barrier. We have the capability to tokenize all sorts of real-world assets. You saw that in our European announcement. We could tokenize privates. Obviously, we're live with tokenized versions of public equities. Real estate, art, all of these assets that have been typically the domain of high net worth individuals. They've been illiquid. They've had high fees for transactions. I think you'll see those being tokenized and being packaged up and made available to the mass market. And I think real estate's a big opportunity. I think it's smart that they're aggressively pursuing that because everyone wants access to high quality real estate, particularly the mass market.
But isn't it true real estate is actually more complex? I mean, they've tried this before. It hasn't really worked.
It has some similarities to a private company, actually. If you think about what a real estate investment looks like, you create a corporation. Using that corporation, you acquire some assets. It has some costs, which you want to minimize as much as possible. Maintenance. It has revenues like rent, receivables, or depending on how you use it. So if you can tokenize a private company, that same technology can actually be used to tokenize real estate, be it residential, commercial, and yeah, I think we figured out how to do it. It's just a question of regulation and what the right products are for different groups of customers. And
at Robinhood, are you in a hurry to tokenize more stocks? Because, we talk about how Wall Street is a laggard, but we've heard from the likes of NASDAQ wanting to tokenize every single stock that is traded on its exchange. Do you feel like that's potential competition there?
I don't think so. I think with NASDAQ and the other sort of traditional players, I expect them to be a late adopter of the technology. And the reason is, it's not really a technology issue or a competence issue. They're very competent, but they have lots of counterparties that they need to bring along on this. They have legacy brick and mortar based financial institutions. They want to make sure that they only move as quickly as their existing customers are able to move. And so I think they'll get there eventually, but they're not at the frontier. And that's why we're focused on our own exchange technology through Bitstamp and Robinhood Chain. I think the infrastructure is not there, which means we're going to have to build a lot of it ourselves to power our own products before the rest of the industry can catch up.
How about in terms of regulation? Some people have suggested that perhaps you're walking a tightrope.
The regulation is critical, and actually a lot of the regulators that we talk to are very, very keen to make this happen. They recognize tokenization as an innovation, and they want to be first. They don't want to be left behind. So you're seeing folks we're talking to in Europe are interested in it. They want to make sure it's safe for customers, of course. In the U.S., Chairman Atkins has said tokenization is happening. It is an innovation, and they're working very closely with industry to make sure it happens safely, but also quickly.
I'll be remiss not to talk about cryptocurrencies. We talk about how excited you are about it. You talk about how cryptocurrencies will be the backbone of the financial system. What gives you that optimism when, not everybody's buying into the whole concept of cryptocurrencies? Yes, they're buying into blockchain technology, but not necessarily cryptocurrencies.
I think from the very beginning, there was a belief by this community that blockchain is going to power a lot of real-world assets. This was maybe, you've heard this for much of the last 10 years. But the problem is that the technology hadn't caught up. There weren't real products in customers' hands, like stock tokens in the EU, for example. And, blockchain itself became a little bit of like a buzzword that people moved away from. They were like, okay, the blockchain thing didn't happen. Let's go to Bitcoin or meme coins. But we've always believed that the technology has very clear advantages. You have 24/7 trading, liquidity with a large global market, instant settlement. The costs of operating a blockchain-based trading system are significantly lower than a traditional trading system because you have less counterparties, less mouths to feed. Much of that is being replaced by computer software. And so I think for that reason, regulatory clarity permitting, if you have the regulatory clarity, the industry is going to move to the most efficient solution that has obvious advantages for getting customers and maintaining customers.
What are your own plans when it comes to investing in cryptocurrencies? You're all in. I know you're all in when it comes to all your different businesses, but for cryptocurrencies in particular, what's the plan there in the next 12, 24 months?
I guess there's two ways to look at cryptocurrencies. One is just as a tradable asset. You have, listing crypto native assets and making them available to our active traders, and then building out the system around that, like collateralization, borrowing, margin, perpetual futures. And we're aggressively investing there. We're already among the leaders, and we think there's a lot of tailwinds for our business in the future. The more interesting thing that I'm excited about is how do we actually get real-world assets on crypto technology? Because I think that expands the addressable market from low single-digit trillions to tens of trillions rather quickly. Because if you look at the size of the global equities market, you're talking like hundreds of trillions, and it's going to continue to grow. So it really starts to get interesting when all of those assets, public and private, get on crypto technology. Then we'll be using it without really thinking about the details of blockchain or what's happening under the hood.
And Vlad, I know that AI is a game changer. You're doing a lot of work on it. We also know that Robinhood has, I think, an investing bot that's supposed to help traders make decisions. What can it do right now? What do you think it will be able to do in the future?
Yeah, so we had our second annual event for active traders called Hood Summit. It was in Las Vegas a couple weeks ago. And there we demonstrated the next evolution of Robinhood Cortex, which is our AI tool. And we have an active trader product called Robinhood Legend. And a good analogy is active traders have some similarity to software engineers. They're using lots of screens, they have a lot of data, and they're creating a trading strategy, which you can think is very similar to a piece of computer software. So I think in the same way that AI has completely transformed the work of a software engineer, making it easier to write code, AI will make it easier to create a trading strategy. And that's the direction Cortex is heading. We want to augment the work of our active traders to make it as easy as possible to create a powerful trading strategy and introduce the guardrails to make sure that it's correct, that you can back test it. And I think we can create a lot more active traders, and we can also save a lot more time. And that's just the beginning. I mean, we've made so much progress on Cortex that we're holding an entire product event dedicated to AI that's going to be in December. So hopefully you'll see some things that you like there.
Vlad, just a quick question. I mean, there's so much optimism, right? You're investing a lot in everything that you do. Is there a risk to all the assumptions you're making right now?
I mean, there's always risks.
What's the biggest one?
I think that we have to make sure that that with any product we introduce, it's safe for customers, that customers understand it, particularly when we get into new innovations like artificial intelligence. AI models can hallucinate, right? And we have to make sure that when it's relating to your important financial services, it's as error-free as possible, like at least as error-free as humans providing the news and information. So actually we spend a lot of time, everyone wants to talk about the innovations, but it rests on a foundation of regulatory compliance, safety, and the infrastructure has to be really robust. And that's probably what takes the majority of the time when we build these products.
Vlad, thanks so much for joining us. Great stuff. Vlad Tenev, co-founder and CEO of Robinhood. Still ahead on Insight. More from Token 2049 when Ethereum joins us to weigh in on the crypto investment landscape, and Sokol breaks down the outlook for stablecoin markets. Keep it here with us. This is Bloomberg. You're watching Insight, coming to you live from the Token 2049 conference here in Singapore. Here's a quick check on crypto prices as we begin the so-called month of Uptober with strong gains. Traders are betting of a rebound after one of the harshest sell-offs in months. Cryptocurrencies shed roughly $300 billion last week as a wave of leveraged bets unraveled, but things may be looking up this month with Bitcoin ending in the green in the last 6 Octobers. Ether, by the way, also historically strong this month, with the exception of 2018 and 2024. Our next guest co-founded Ethereum over a decade ago and then launched Cardano through his engineering firm, Input Output Group, who remains one of the most recognized figures in global crypto and one of the most outspoken as well. Let's bring in Charles Hoskinson. Charles, a pleasure to have you on the show.
Thank you so much.
Let's start with the recent sell-off. What's that? Is that cryptocurrencies losing momentum?
No, it's just a quick pit stop at the gas station before we go on the long road trip.
So how healthy correction. Where do cryptocurrencies go from here?
Well, the demand is still incredibly strong. We got a lot of things to look forward to. The Clarity Act is likely going to get passed, and that's going to bring a lot of institutional players in. User growth is strong. Institutional demand for Bitcoin is very strong. A lot of innovation, a lot of new projects. VC is a little stagnant during these time periods, but it'll pick up in the last part of the quarter and early next quarter. So I think probably middle of next year, $250,000 Bitcoin.
What's the risk out there, right? And some say that the optimism is partly driven by easing rate cycle, but who knows where that's going, how far, how fast. Might the crypto world participants, investors be disappointed? Yeah.
The challenge for cryptocurrencies is it has to decide what kind of asset it wants to be. Does it want to be a tech stock, or does it want to be like a contrarian, counter-cyclical thing when the government's not doing well? And some days it wakes up and it says, hey, when the dollar's weak, crypto's strong. And some other days it wakes up and it says it'll follow the dollar or follow tech stocks. So we'll figure that out this cycle as the institutions come in and they figure out how they want to trade it and what bets they want to have. But there's just simply put too many people and too much money coming in space relative to the supply. So I think we're still headed towards a bull market. Just stuff happens, like the tariffs and the fight over interest rates and these things, and we're not immune to the macro. You know, we live within that, and when there's geopolitics or bigger economic concerns, people get a bit more conservative and they wait to deploy capital.
In your opinion, what's the tightest correlation to cryptocurrencies? Would it be the dollar? Would it be gold? Would it be, what would that be?
During the bear market the last few years, it was tech stocks. And then it followed gold for a little bit. And hopefully it's large enough to basically be its own asset class.
I want to get you to look into the crystal ball in terms of pricing. Where do you think Bitcoin is going? And linked to that, where Ethereum is headed?
Yeah. So I think all the alts are going to enjoy a nice spike, but typically there's a lag. So Bitcoin goes up, it stalls, and then the alts come up, and then the market goes down, it reaches a new plateau. We sit there for a few years, and then we go up. Those cycles were retail driven, and they were every 4 years. But now that we have all this institutional involvement, we have things like the Clarity Act coming, you're going to have probably another 500 million to 1 billion users entering the space as the Magnificent Seven come in and they integrate crypto into their platforms. We're already starting to see the banks come in because of the Genius Act, and these create disruptions that are unpredictable because that's a different kind of capital than these retail cycles that we have. So in terms of price, I still firmly believe that Bitcoin's probably going to peak somewhere around 250,000 sometime next year. And
sometime next year is middle of next year?
Yeah, probably about middle of next year. It just depends on the macroeconomics.
And Ethereum?
It's hard to say, but usually you see a proportionality with those types of things. So I could see another 30 to 50%, but I'm the worst trader in the world, so don't take any financial advice from me.
Hey, you know, you made a cryptic comment on X. You said Cardano is going to break the internet. What's the basis of that comment?
We're having a lot of fun with Cardano right now. We got the launch of Midnight, we got Ouroboros Leos coming out, and so just everything's getting better in that ecosystem. A lot of wonderful partnerships, a lot of wonderful collaborations like the one with Google Cloud, and so it's just fun to see that the community's waking up and been reinvigorated, and we've kind of survived the worst parts of crypto, and now we're on the other side of it, and we're getting very excited for the bull market.
It has reignited the debate whether Cardano is sound money or not.
Well, we're deflationary like Bitcoin, and I'd argue that we're in the same category as that. But then, you get to this definition of what is sound money, and is Bitcoin money, or is it digital gold or not? But regardless, the magic of what we've been building with Cardano is the ecosystem. It's the millions of people that are there. It's the decentralization. And in fact, we've been running for 8 years straight, 24 hours a day, 7 days a week, never been hacked, never gone down. There's a foundational reliability there, which is why the U.S. government likes it. They tweeted about it. It's going to the reserve. And it's also why a lot of institutional people like Cardano is one of the blue chips of the industry.
What I find interesting is that Cardano has often been seen or has been said to be a threat to Bitcoin's dominance. I mean, don't they have different value propositions?
Yeah, and I don't view anybody as a threat to each other anymore. I mean, the big challenge for us is we kind of won. We're like the dog as an industry that kept chasing the car and finally catches it, and it doesn't know what to do with the car. So the regulators have finally embraced us. We're talking to the Federal Reserve. We're talking to the SEC on favorable terms as an industry, and now we need to reconcile the legacy world and the DeFi world and bring them together and just have FI, next generation finance. So everybody has a role to play in that, whether you're Bitcoin or Ethereum or Cardano. It's going going to take a little bit of time to figure out how to do compliance and what privacy looks like and how global settlement's going to work. Like every securities law has to be rewritten for
So you're talking about a coexistence between traditional finance and what we have right now, what you represent. I just had a conversation with Vlad Tenev of Robinhood. He talks about how cryptocurrencies will be the backbone of the financial system.
Yeah.
Will it be?
I think so. I mean, tokens are like financial stem cells. They can be heart cells and brain cells, and so they can be securities or commodities or currencies or intellectual property. And having T0 24/7 global settlement with full programmability is a really powerful thing. The only thing we're missing is selective disclosure and rational privacy. You need to have the ability to do private smart contracts to sort out the private side from the public side, and that's where the industry's at right now, solving that last mile problem. Once you have it, you can pull everything together, and then you can be a superset to broker-dealers and superset to custodians and all this other stuff that runs the legacy world. And at that point, there's no reason to run on the legacy systems. You want to run the crypto systems because there's far more liquidity.
And when will that happen?
Within the next 3 to 5 years. And the big challenge was regulation, but the regulation's getting done. You know, Clarity Act will probably be passed in October, and then it'll be about 2 to 3 years of rulemaking between the SEC and the CFTC, and then every jurisdiction, the MiCA framework in Europe or Abu Dhabi's ADGM or here the Singapore Monetary Authority, will have to be interoperable with that financial set. And it's not going to just talk about tokens, it's going to talk about securities laws and taxes and custodial standards, and then we as an industry can adapt our software accordingly, and then all the securities will enter in. That's $10 trillion on the blockchain space, and then everything else is the sky's the limit. So we've basically won as an industry.
There's so many issues within the space. There's cryptocurrencies, tokenization, and now the big thing is DATs, digital asset treasuries. What do you make of the inflated valuations that we're seeing?
Wall Street's never found something they couldn't securitize and mess with. It's just an old play run again and again and again, and they've already overdone it, which is why the valuations of DATs are starting to decline. And what's happening with DATs is they have to go from a trade to an investment. So the first layers of DATs that were launched, they were all about, hey, let's get in and out in 90 days or 120 days and make a multiplier. But there was really no desire or connection to the underlying asset in terms of a long-term goal to be in the ecosystem. But now what's happening is they have to convert these into almost like blockchain development companies, and there they have to think about, okay, how do we create value for this ecosystem 3 years, 5 years, 10 years? And you can look at a DAT as kind of an index of an entire ecosystem, not just the underlying asset, but all the things built on it, all the partnerships derived from it. So they figured out the financing mechanism, they figured out how to get liquidity, now they have to actually figure out how to responsibly place the money, and they'll get that sorted out, and the SEC will come in at some point and say, hey, calm down a little bit. They always do, and they'll figure out a way to run these that are beneficial for everybody, including the investors.
How will it shake out? Winners, losers?
Any person that's in it for the long run that bets on why the technology is here, that T0 settlement, that 24/7 liquidity, the ability to make settlement compliance, automated regulation, these types of things is going to do really well, because those types of systems are going to be the inheritors of trillions of dollars of new assets. Any person that's coming in and trying to figure out the timing of the market and, how do I get in a month and get out next month, you tend not to do very well, because the problem with crypto is it's too subject to black swan events. You have major companies collapse and major people go to jail and big regulatory events and macro factors like war in Ukraine or tariffs that come in, and they blow up a market that seems to be heading towards a bull run, or they build up a market that seems to be heading towards a bear run. So I wouldn't try to time it. Instead, you leave, like Warren Buffett saying markets are weighing mechanisms. You just look at the long term and say, what are the fundamental bets in 3 to 5, 10 years? Make those bets and you'll do very well.
Are you studying a new coin after Cardano and Ethereum? Are you looking at one?
Yeah, well, we have Midnight coming out, and that's kind of an extension of what we've done in the Cardano ecosystem, but that's a big bet on rational privacy and selective disclosure, because we wanted something for Wall Street to enjoy having. We wanted something for the custodians and the exchanges and the big guys to be able to tokenize what they currently have, but bring it into the cryptocurrency space and project it into Ethereum, into Cardano and Solana. So we're having a lot of fun because we get to be everybody's friend right now, whether they're the legacy people or the DeFi people. So that's going to be great. Midnight's coming towards the end of the year.
All right, you are having a lot of fun, Charles. Thanks for stopping by. Charles Hoskinson, co-founder of Ethereum and founder and CEO of Input Output Group. More coming up from Token 2049. Circle President will be joining us up next to unpack their global expansion strategy. Keep it here with us. This is Bloomberg.
you're starting to see the industry now go from a stance that historically has been very defensive and closed because we were living under this environment where there was a fear of regulation by enforcement to one that's really pushing forward on new product innovation. And I think that's creating a lot of excitement from institutional customers, retail customers, et cetera, around trends like stablecoins and tokenization.
Crypto always has ups and downs. I think you want to zoom out a little bit and look at the overall trend line. Very, very clear. There was a little bit of leverage that got flushed out of the system. But today you see assets are up. I think the reality is that every leg up on crypto always has these little breaks along the way for everyone to catch their breath, reload, and see what's coming next.
Business leaders and experts at Token 2049 in Singapore giving insights on the outlook for the crypto sector. Now, Nikkei Asia reports that Singapore is pulling ahead of Hong Kong, no less, in launching a cryptocurrency pegged to the city-state's dollar. That's as the rival financial centers vie to attract digital asset businesses amid a surge in the value of crypto tokens. Bloomberg recently spoke with ARK Invest CEO Cathie Wood and MicroStrategy Executive Chairman Michael Saylor about the buzz around stablecoins.
This crypto cycle, we think stablecoins generally, and of course Tether and Circle have 90% of the stablecoin market now. We think that is a very important entree. The holders of stablecoin will have an entree into the DeFi ecosystem.
The killer application of Bitcoin is digital credit issued against digital capital, whereas the killer application for medium of exchange is a digital currency in the form of a stable coin. I think the crypto industry understands this, and I think the people of the world understand it. If you talk to anybody and ask them how they're going to pay for their cup of coffee, they're going to send a stable coin from their mobile phone app. And if you ask them, what do you give to your granddaughter, they're going to say, give them a Bitcoin.
Well, our next guest, Ron Circle, the world's second biggest issuer of stablecoins. Joining us exclusively is the company's president, Heath Tarbert. He's also served as Assistant Secretary of the U.S. Treasury and Chairman of the Commodity Futures Trading Commission. Thank you so much for joining us.
Thank you so much for having me.
There's so much optimism over stablecoins. Some people say that we're at the start of a gold rush for stablecoins. Your thoughts on that, and where is it headed?
Look, we certainly see major growth in stablecoins over the last year. Stablecoins are really the way to send money in the 21st century. As easy, as safely and securely as you send an email. So our USDC circulates over 185 different countries, and we see it continuing to grow.
And of course, Scott Basson has come out to say he himself is pretty optimistic about stablecoins. He sees stablecoins growing from $2 trillion from $300 billion currently. That's a huge jump. What might drive stablecoins to $3 trillion?
Well, we're certainly seeing stablecoins be the main medium of exchange on digital asset exchanges, the crypto ethosphere. But in the last few years, we're also seeing stablecoins decouple from those markets. We're seeing stablecoins be used as payments cross-border by companies, by individuals, cross-border remittances, as well as a store of value. So what we're seeing is stablecoins becoming a part of the traditional financial sector in a way that maybe other digital assets aren't, or at least haven't yet.
But isn't it true that stablecoins, 80% of stablecoins, still being used for trading? I mean, 20% needs to go way higher for things like paying for coffees and so on and so forth, right?
Yes, we're seeing it decouple, actually. So we're seeing stablecoins start to be used by multinational companies, by large financial institutions to send money across border for trade finance and other things. So that I think you're going to see that percentage grow and diverge in the years to come.
We also heard from Scott Basson saying that he expects stablecoins to be gobbling up treasuries. What could lead to that?
Well, a stable coin like USDC is safe, compliant, trust, and transparent. And And why it is such a solid stablecoin is because it's backed one for one by high-quality liquid assets, mostly U.S. Treasuries in the form of money market fund shares that are purchasing that. And so when you have stablecoin money, unlike bank deposits, that are backed one for one with high-quality liquid assets, the natural thing to back a U.S. dollar stablecoin that Circle has done is to back it with Treasuries.
China, not to be outdone, after banning cryptocurrencies, has now, launched its yuan stablecoin recently. Some say better late than never. What's your take on the impact of a yuan stablecoin internationally? Well,
at Circle, we welcome other stablecoins in other currencies because we actually think that's going to contribute to the growth of the stablecoin market. So if, in fact, there's a digital yuan that's issued either by a central bank or by private sector actors, they're ultimately going to need a U.S. dollar stablecoin to convert into and to work with. And we think there's nothing better than USDC. So our view is the more stable coins that come online in different currencies, the better it will be for the ecosystem as more things move on chain.
But in terms of impact on a dollar-based stable coin, what might that be?
We think it's ultimately going to grow. We think, again, the more stable coins that are out there, the more folks are using stable coins in other currencies, the more they're likely to convert into US dollars. So we think the pie as a whole is probably going to grow as a result of that. So we welcome that.
Is there a sense that it has become a geostrategic, component, because China's doing its yuan stable coin because, it's trying to convince the world to move away from its dependence on the U.S.
Ultimately, I think if you want to play a role in the Web3 ecosystem, you want to have your national currency on the web, on-chain. So that was a big decision that the United States made in actually creating the first time ever federal framework for stablecoins in the U.S. in terms of the Genius Act. And so other countries, I think, really do need to follow suit because they're going to be left behind if their national currency is not part of the Web3 ecosystem.
Circle is onto something really interesting. It's working towards a reversible transaction. Talk to us about the thinking behind that, because it's beginning to look and sound like traditional finance.
Yeah, so to take a step back, Circle recently announced that we've created ARC, or we're creating ARC. It is the first enterprise-grade stablecoin specific L1 blockchain. And what we're doing is, in building ARC, is we're listening to all sorts of folks. We're listening to the Web3 ecosystem, we're listening to the TradFi ecosystem, and we're trying to get the best of both. We're synthesizing, basically, if you will, what people want. And one of the things that people want, of course, is immutability. And they want, in particular, sub-second deterministic finality. Now, that's a fancy way of saying when a large institution hits that button, sends billions of dollars, they need to know immediately that the transaction has been validated, will be validated. Unlike the current general blockchains out there where you have to wait several minutes, it's probabilistic determination. So on ARC, it will absolutely be immutable. But we're also hearing folks that say, there are benefits to the TradFi world where, for example, you have chargebacks for fraud or mistakes. And so we're also considering a layer on top of the immutable blockchain, which is an application that would allow folks to opt in under certain conditions that everyone agrees to, quote, reverse a transaction, not to unwind the original transaction, but to be able to have chargebacks. And so all of that, I think you are seeing a merging of the Web3 ecosystem in the traditional financial sector and what we call the new internet financial system.
To put it simply, it's a case of getting your money back if you feel like you've been scammed, correct?
Yeah, and there's agreement among all the parties that, in fact, there is a mechanism for that. So you can imagine a bunch of large institutions that have ways of sending money back and forth and a process for saying, this transaction was a mistake, and ultimately they can work it out amongst themselves. This would all be built into a programmable application layer that would have conditions that everyone would agree to. But if folks want it, and it's very important, then that's something Circle's looking to work with them to build.
Are you testing it out already?
We hope to make announcements fairly soon as to the public testnet and rolling out our blockchain. So stay tuned.
In terms of the stablecoin space, what are some of the risks that you see out there in the next 12, 24 months?
Well, one of the big risks is that not all stablecoins are stable. Not all stablecoins are equal. something like a USDC, which is trusted, transparent, regulatory compliant, backed one for one, in some ways is rare. And other stablecoins that are out there, folks are buying them thinking they represent effectively another US dollar similar to USDC, but they're really not. We saw Terra Luna, we saw other folks. So what Circle is trying to do is make sure that there are uniform standards for stablecoins globally, so everyday people can use these things like in the beginning of the conversation when the man was talking about his granddaughter, that they can use them safely and securely.
The thing is coordinating regulation. Where are we with that?
The good news is we're starting to see a trend of more and more regimes coming up with stablecoin specific regulations, much of which, quite frankly, look like the standards that Circle has imposed on itself far before anyone told us we had to. The United States, we have the Genius Act. In the European Union, we have MiCA, and we're starting to see more and more stablecoin legislation developed. And in fact, Hong Kong, just last month, their stablecoin ordinance went into effect, and we understand Singapore is working on its stablecoin-specific legislation as well.
Heath, before we go, what should we be looking out for in the stablecoin space?
I think more and more use cases that go beyond just traditional crypto markets. I think companies now are realizing that waiting 5 days to send money overseas, paying 6% and 7% fees, is no longer going to be the way to conduct business in the 21st century. So I think you'll start to see that decoupling grow even more that we talked about.
Heath, great stuff. Thanks so much for dropping by.
Really wonderful to be here. Thank you so much.
Heath Tarbert, President of Circle. Before we go, here's a look at our show tomorrow. Mega trends take center stage at the Milken Institute Asia Summit here in Singapore. Join us for conversations with Khazanah Nasional CIO, former Canadian Trade Minister Mary Ang, and Indonesia's Vice Minister of Trade, Tia Roro Esti Widya Putri. That is it for Insight, live from Token 2049 conference here in Singapore. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.